When you're thinking about cryptocurrency and kind of the state of the entire investment community, one of the things that we look at more than any is sentiment and the data and analytic tools that we use to kind of get you guys some results. My name is Paul Barron, and welcome back to TechPath. As you guys know, we try to bring on CEOs, co-founders, innovators, experts within the industry, and joining me today is Ryan Gorman, who is one of the co-founders over at Trade the Chain. Great to have you on, man.
Yeah, Paul, thanks for having me.
Good. And obviously, we're a customer of Trade the Chain. Full disclosure, I use it every day pretty much. It is a tool that we actually showcase here on the show quite a bit in the sense of how do we use it to provide analytics for crypto trading. We stack some other tools with it, but it becomes part of the arsenal overall. But for those who do not know a lot about what Trade the Chain is, kind of give us a little precursor on what you guys have done.
Yeah, absolutely. Thanks, Paul. So Trade the Chain is a global community of traders, a couple thousand traders, and they all use sentiment analysis. They use actionable alerts, and it helps them, trade with the same tools that bigger asset managers and whales have had access to traditionally in the traditional financial markets.
Okay, so sentiment data, and of course, I think this particular investment class reacts a little differently than some of the traditional investment class out there, whether you're looking at stock or bonds or inter-traditional stuff like real estate, even if you want to go down to the street level. But crypto is definitely one of those things that has a volatility designed into it, and I think that was also built into much of the blockchain in general. Your thoughts on how, I guess, to what level in terms of measuring sentiment and how it applies to price prediction and or potential long-term holding patterns, how do you guys apply your tool set to make that a reality?
Sure, that's a great question. And so the way Trade the Chain actually works, and we derive these sentiment scores that you've shown on your show before, is by crawling the web every 2 seconds across more than 3,000 data sources that include social media, corporate websites, blogs, what have you. And we're able to distill that down into a quantifiable measure of how traders and how the markets are thinking. And by doing that, we're able to enable our community to see inside the minds of traders who are driving market momentum. And since community is such a big part of digital asset trading, and that's clearly bled over into traditional markets with what's going on with Wall Street bets and some of the stocks being driven up there, AMC, GME, it's shown to be an accurate predictor of where markets will head. We're able to provide 1 hour price prediction with 95% certainty. And if you're looking further out, we have sentiment scores on a 1 hour, 7-day, and 30-day basis that let you know where, based on historical patterns and sentiment, where the markets are likely to head during those timeframes.
Yeah, I've had several people on the show. We've talked about kind of the historical patterns of where cryptocurrency has been over the past 2 cycles. Primarily, one of the things that at least we've noticed in this cycle of, kind of this bull run is that there has been and is a different set of rules, it feels like. We have, these ultra social creatures such as an Elon Musk, a Michael Saylor, et cetera, that have a certain amount of amplification capability within their own communities that just becomes kind of an animal on its own. And then you have this influx of structured capital, traditional institutions that are moving into the space. And then obviously you have the traditional bulls, which have always been here, and the whales for cryptocurrency. Do you feel like now that we have all these new influence factors coming into the space that maybe looking back at historical analysis is not necessarily going to play out in the future for crypto investing?
I don't necessarily think that, no, because what we've seen in our community and what we're seeing in the markets more broadly is that people react less to what Michael Saylor and Elon Musk are saying than they did earlier in this bull cycle, right? So you have what happened earlier today, like El Salvador, where their government voted into law that Bitcoin is now legal tender. And that clearly had an effect on Bitcoin because it's up, what, 10%?
Right.
Whereas you have Michael Saylor announcing earlier this week that MicroStrategy is going to issue $500 million in preferred debt to buy more Bitcoin. Last year, that had an impact on the markets. This year, it didn't even move the needle. So I think that influencers, as the markets grow larger and people become weary of, what their ultimate motivations are, I think they have less of an impact than community and how the community feels about different developments in the market that on a macro and micro level.
So the less on the impact of single, but what
Correct.
about the act or impact of the consensus? Everything from
Correct.
sentiment, amplification, the numbers, which that usually has a completely different profile when you look at data analysis over time of how that might work into a potential price prediction or a long-term hold scenario.
Exactly. So the power of the individual has waned as the market has grown and more people have entered it, right? You have more wallets with non-zero balances than ever before. So that means
Hmm.
there are more people who are active in the market than ever before. And when you have that and you have different people with different backgrounds and different points of view, different motivations, they're in different geographic locations, they're not necessarily going to react to a Michael Saylor who they might not even know who he is. They won't react to him or to an Elon Musk the same way that people in the United States or people in the European or Asia Pacific tech communities would. And especially when you look at historical patterns of crypto markets being driven largely by overnight trading, US time, the daytime in Asia, I just think, and our data bears that out, and chatter in our community bears that out, that it takes more to move the needle these days than
Right.
just a tweet from an Elon Musk or someone else, or Michael Saylor saying his company is somehow buying more Bitcoin in an even more irresponsible way.
All right, I want to jump to your to the app. We're going to actually do a double screen here in showing Trade the Chain. I want to kind of point out some of the tool sets that we use and get kind of an insider's understanding. Obviously, we get the traditional data from market cap,
Hmm.
the big boys in terms of Bitcoin and Bitcoin daily sentiment, setting it bullish, and then you've got Ethereum and so on. I'm kind of curious, are there a potential for you guys to look at adding some other metrics into this kind of this home page that you guys have for your spotlight section right here? Anything coming down the pipe that's new in some of these areas? Because I find a lot of these are really very helpful.
Oh, absolutely. And that's been a lot of the feedback we get from our members as well. They really like how easy to digest, how clear and quickly readable the data on the homepage is on the dashboard.
Yep.
And through feedback from that community, we're constantly receiving suggestions from them, from other partners, from Kraken, who through CryptoWatch we've integrated with for our charting and sentiment charts. We definitely have a few things in the pipeline, but I think it's just a little too early to tell you what we're working on. Sorry, Paul.
No worries, no worries. I was hoping that we'd get a big breaking news release here. That would be amazing,
I
as we
would
get
love
into that.
nothing more. I would love nothing more than to tell you, but it's too soon. But we should
Yeah.
have some things coming in the not too distant future.
Let's talk a little bit about when you think about the ecosystem in general of where crypto investing has come from since 2017, kind of the cycle that I think has kind of put crypto on the map of where we are today and what it potentially could be in the future. The idea, and we've had a few experts on and some other, a supplier, I shouldn't say supplier, vendors and solution providers on that are talking about amping up the game into things like quant data to be able to kind of address the more structured fund managers and kind of where that market is going. Do you see that as a market for where crypto, analysis and TA could go?
Oh, absolutely. That's a great point, right? When you're looking at the growing institutionalization of the market, you're going to have those more sophisticated players coming in with different algo
Hmm.
strategies, with different quant points of view, and it absolutely will begin to have more of an impact over the market. But I think that that's a ways off, right? Because right now, in digital assets, in crypto assets, you have a largely retail dominated market. And that's why the power of the community is so strong. And that's
Right.
why if you get a strong community behind a specific asset like a T-Fuel or Matic or the Graph, like we've seen, or even Ethereum or some DeFi projects, the way they've gone up this year, I think you can have a much, much more impact as an investor than you can, say, or at least until recently, in the equities markets.
Yeah, so how long do you think it's going to be before we start to see that? Because I feel like right now it's still a everyman's game, in the sense of investing. The tool sets are somewhat equal. It's not like Bloomberg Terminal, which is ridiculously priced for an average investor. They're not going to go out and use that. But something like what you guys are doing, Trade the Chain, you've got Token Metrics, there's a whole slew of them that are reasonably priced tool sets that can really kind of keep you in the game, whether you're doing trading or you're doing even long-term holding positions. How long do you think it's going to be before we see that market really being challenged by the more institutional money?
I think that it's a ways off, only because for institutions to jump in at the level that we keep hearing people saying, and a lot of people are holding their breath for that wall of institutional capital, I think we need more regulatory clarity. And until
Right.
we get that, and that's I work my day job. I'm also principal at a public relations firm, working with hedge funds, working with exchanges, working with prime brokers and service providers to institutions, and everything that you hear from them and all of their counterparties is that we need more regulatory clarity. And with
Right.
the new regime in charge, they appear very eager here in the US to provide that regulatory clarity, but we all know that that doesn't happen overnight. Once we get that clarity, and I keep using the word clarity because that's really the only way to look at it. Right now, it's kind of it's a fog in many areas. I think that that's when we'll start to see the more exchange traded products. We'll start to see more structured products, and we'll start to see the values, especially if Bitcoin, start to reach some of those sky high numbers that we've seen from Guggenheim, from JP Morgan, and some of the other smart money players in the space, where they expect Bitcoin to be going in the not too distant future.
Yeah. I'm kind of curious. Okay, so we've got El Salvador playing into the game, obviously China with their digital yuan.
Hmm.
Many countries are trying to reconstruct their entire fiat systems right now. It's on the table right now for a lot of places around the world. And if you look at the data sets because in the past, the dollar and these traditional fiat are moving with other types of markets where cryptocurrency and digital assets, blockchain assets, are moving with a completely different flow. It's almost like two different rivers in completely different places. And the interesting thing I have been observing is the blockchain data sets that are starting to come out of the, kind of the traditional reporting capabilities of some of these platforms. The blockchain data sets, how much of an advantage could this play into countries, actual nation states, of being able to really understand what's happening in their currency? Because if you ask, flow of dollar outside the traditional economics and even things around, the monetary system as we built it here around just the US dollar, in many cases, I don't know that a lot of people would have real accurate measurement where the blockchain is going to give us the capability to really look at a lot of things like throughput, flow, different types of asset control scenarios that might go into demographical scenarios that you could study to really understand how society is using value. We won't call it cash, we'll just call it value. What do
Yep.
you think that's going to do in the future around data analysis?
So think about this, right? The cash you have in your pocket, you can spend that on whatever you want, and no one
Yep,
knows unless you tell them, right? So the government
exactly.
has no idea if you buy a magazine, if you buy a pack of cigarettes, you buy a bottle of wine, or whatever else you want to buy. If it's on the blockchain, everything is traceable. And that's a good thing and a bad thing, right? So CBDCs, I think they're the greatest fear of a lot of
Hmm.
privacy coin advocates, of a lot of Bitcoin advocates, because they enable the government to effectively control money in a way that up until now, or up until then, wasn't at all possible. I was
Right.
looking at Etherscan earlier today, trying to figure out some transactions, and I was not only able to figure out the source of some money, but I was able to figure out each step along the way, where it went, and what it was ultimately swapped into on Uniswap and where it lies right now. And then I was
Yeah.
able to look at all the holdings in that wallet. Imagine giving the government that much access to your capital.
Yeah.
I'm not necessarily saying that that's a bad thing that governments could have that much access, but I don't know that I necessarily want to give them that much access. And that's why I
Mm.
think a Monero or some of the other privacy coins out there, that they may not ever be the biggest coins or the biggest projects, but they will always have utility for people who just don't want the government being able to control their spending in a way that they up until now haven't been able to.
Well, maybe not necessarily control, but definitely understand where the transactions are going. I mean, the IRS would love this if you were to get to that level of integration.
Uh-huh.
The key here, I think, is we're decades away from a digital
Oh,
currency that could
absolutely.
go to that for
Hmm.
sure. But there are going to be some interesting countries, maybe early adopters, that start to at least identify certain transaction layers that could help them on the global and economic stage, especially if they understand how cash and value is being utilized in their countries. It could really kind of change things up for them. I'm just thinking of somewhere like India, where you look at a certain amount of technology and kind of the gig economy and what's being used. We have our own developers here for our network that are in India, and they ask us to pay them in Bitcoin,
Well, I
which
think that's
is
also
kind of a traditional thing.
no, I would love if I could get paid in Bitcoin. But I think, that's also part of what El Salvador is doing, right? A lot of people are
Right.
looking at this as they're setting up their citizens. Someone I saw on Twitter earlier today, setting up their citizens to be wealthier in 5 to 10 years than the average
Hmm.
other country, one of their neighbors, right? And I think
Exactly.
that that is likely. But I think it's more on the lines of the point you were making, trying to understand how money flows, where it's going, what it's being spent on, and trying to optimize the economy in a way that up until now isn't really possible in the developing world. But I think, a few decades from now, people might look back and start to regret some of the access they gave the government to their financial transactions. Uh, the,
Yeah.
the paranoia in me being a former journalist must be.
Yeah, I'm with you on that one. I definitely understand both the double-edged sword here that we have in the blockchain. I think a lot of people that maybe are new into cryptocurrency do not necessarily understand just how traceable the blockchain is, and it is a public ledger. It is extremely accurate, almost untouchable in terms of how it can be penetrated, through nefarious means. So there's a lot of good potentials here for sure. I'm curious how all that's going to layer in when you get to blockchain data metrics as well as the sentiment data. I think this would be kind of a magical tool for countries in the future to really understand and, like you mentioned, leverage against their economy and really start to create certain power centers that could maybe even take a third world country and put them on the global stage with some of the G7s in terms of whether it's software development, certain consumer spending habits, all those kind of things that could kind of play into this. Going to be interesting for sure.
Oh, absolutely.
Okay, so Ryan, let's get into a couple of trend things here quickly.
Sure.
If you look, let's go short term and long term, and I know short term is tomorrow in crypto, but in my short term, I'm saying let's say the 90 days, end of summer. Do you feel like the market cap overall for crypto is going to be continuing up, or do we see this as a kind of a waning bull cycle that could just kind of start to really fade away? Your thoughts?
So there's two ways of looking at that. One, as long as the recovery in the US and elsewhere as we emerge from the pandemic goes as expected, I could see crypto going higher, right?
Hmm.
But if the recovery isn't quite as robust as people are expecting and equities start to sell off,
Yep.
there is a correlation between when equities sell off and when crypto sells off.
Yep.
And I think that that could harm any bull chances, any chances of a continuing bull market for digital assets. The absence of that sell off, I am strongly in agreement that we will be higher than we are today.
Okay. All right. Well, I think the key there is going to be what's happening in Washington today, right now around, what Biden's trying to go through in terms of the infrastructure component. If that really starts to slow down, could that, kind of reposition people on where the potential growth opportunities are for the U.S. in the next couple of years? Especially, and could that affect Wall Street? I don't know. I feel like Wall Street's almost in a world of its own right now. It is in a very unusual place, one that we have not tracked in years, and we've got a lot of asset managers and people that come on this show that can't necessarily put a finger on it. It's just that unusual at this state for sure.
Valuations in traditional equity markets don't make any sense to me. You had the
Yeah.
economy at historically low levels of activity, and
Hmm.
equities just kept going up. There was such a divergence between the real world and the financial world. And, a lot of it was underpinned by buybacks, right? And when you
Yep.
have this underpinned by buybacks, all it's doing is masking, it's putting a fresh coat of paint over weak fundamentals. And eventually that bill comes due. I'm curious how that's going to affect companies, say 3, 4, 5 years down the line when some of those
Yeah.
bills, they have to pay them.
Yeah, exactly. Do you see cryptocurrency or digital assets becoming a hedge for that at all in any way? Because I see some people arguing, the digital gold aspect and where Bitcoin's position could be around gold and what its value is and kind of its evolution and reign to power. Any potential of cryptocurrency becoming a hedge solution for a lot of investors?
I think yes, but I think that we're a long ways off. Bitcoin is not digital gold right now. It's
Yeah.
too volatile. And maybe 20, 30, 40 years down the line, it won't be once it grows in market cap and enough people and entities are transacting in it. But it's just way too soon to even consider it as such, I think.
Now, you're saying 20, 30 years
Yeah, absolutely.
away for that, for a complete restructure. So that's interesting. That's definitely a long line out of where this could be. Do you see, okay, well, let's just ask, where do you see this in the next 5 years?
In the next 5 years, I feel like DeFi will overtake Bitcoin. I wouldn't be surprised if Ethereum in straight market cap terms, overtakes Bitcoin, just because there's so much more going on the Ethereum blockchain. There's so much more going on in DeFi projects that are addressing the needs of the unbanked and underbanked in a lot of the developing world, and even in the developed world, people who don't have the greatest credit scores or don't have, for whatever reason, don't have access to traditional financial services, they can get
Right.
them through DeFi projects. And since everything is built, a lot of it rather, is built on the Ethereum blockchain, I can see Bitcoin's dominance and overall position at the top waning over the next 5 years.
Yeah. Well, that's going to be interesting to watch. I think that's kind of we just had a show on this of whether or not the flippening could occur. The question is short term, probably not so much because of just, Bitcoin's dominance and its control in the marketplace, but definitely over a multi-year cycle. I would agree with you. I think there are some, there's so many projects that are kind of, and we're just scratching the surface, I think, in a lot of DeFi right now of where it's going. Anything that you're seeing in DeFi that really kind of just blows you away?
I'm amazed at, even with the overall market just not performing that well, that
Hmm.
projects continue to accumulate total value locked. And they just keep going up. And you look at the DeFi pulse chart, and for the most part, except for a brief sell off, those values just keep going up, and more projects keep coming online, and they just keep raising money. And there are so many uses that even 2 years ago we didn't know that they would be here.
Right.
We didn't know, like, I'm just excited to see what's going to happen in the next 2, 3 years and see what kind of projects come up with solutions that we didn't even know were necessary, and just watch their values go through the roof because they address issues that we don't have in the developed world. And I think a lot of that, there are great projects like Yellow Card in Africa who address the needs like microtransactions and enable people to
Hmm.
pay each other just by texting people on their cell phones.
Yep.
And I think it's just, there's so much going on right now that it's almost impossible to pick an individual project.
That was a very eloquent way to do that. I'm gonna have to use that in the future. Nice move, Ryan. Nice move. I like
you're,
it.
you're welcome.
Yeah, I've seen a lot of people dodge questions before. That might have been my number one best yet. So at least you win the Tech Path Prize for a best and most eloquent way to not go there. Listen, hey Ryan, it was great having you on today. Thanks so much for stopping in. Keep doing what you guys are doing over at Trade the Chain. We love the product and you guys keep killing it. Thanks for stopping in. We appreciate it.
Thanks so much for having me.
All right, so you guys are tuned in over on the podcast. Hit the like button, subscribe, and of course, if you're watching here on YouTube, make sure and share this video out there to the masses. help us grow this channel. It's really starting to take off, and we're getting some great input from you. So thank you so much for all that. If you want to hit me up on Twitter, just do that, @Paul Barron. I'll catch you next time right here on TechPath.